water with some ice. The ice done melted. Actually, I'll get some coffee. Coffee, please. Café und Milch, bitte.
There we go. We are live. The Cashflow Chronicles, June 18th, 2025. Mr. Patel, what's it like to be the future of the stock market?
I am not the future of the stock market, bro. A bunch of people have come and gone and they've been chewed out. And the market, when things are great, everyone's like, oh my God, I'm the smartest person in the world. And when things don't work out, it's a complete opposite. So, we just have to celebrate when things are up and, hold each other close when things are down. And today's one of those days where we all have to celebrate together, right? So I think we did really well today, especially considering some of our major positions did increasingly well. I will be the first to admit that I was wrong about Oscar when I first looked at it. I really had to dig deep and dive into it.
Not even before you first looked at it. What about when I first mentioned it to you?
I saw low margin business until I did my own set of research.
So I'm no genius, right? Other people have asked me about it, right? So I'm not like, I hope people don't think, I don't know who kind of brought it to my attention. Yeah. I know Tevis is in it, but somebody kept poking me on lives. Like, what do you think? What do you think? And people, this is the thing. I actually am kind of curious of your thoughts. People are like, oh yeah, Oscar and Lemonade. I'm like, no. Oscar, yes. Lemonade, I'm staying away from that one still, unless they change their tune.
One of the reasons why I had literally an epiphany when it came to Oscar a few nights ago was it's because of this giant legislative change that we just saw. Right. So sometimes you have to wait until these catalysts come around to get you to that level where you're like, oh, yeah, you know what? This actually makes sense. Like when we were looking at Next Decade and Venture Global and everything else, especially Next Decade, if you remember in August when the Biden administration was pausing all the LNG terminals, the investment was like, oh, my God, what's going to happen? And the stock price got cut. Yeah. And we were like, what the hell is going to happen to this thing?
Luckily I bought more, but yes, I know exactly what you mean. It was very regulatory dependent.
Yeah. So sometimes it's not necessarily just finding the right company, but also finding the right environment where things are actually going to succeed. I mean, this is something like all the ASTS bulls that are doing really well right now. And I'm glad that you guys are doing well, but you have to realize that there are some catalysts out there that are, what is that? Hi, I'm a streamer reaching out because, get rid of these people, man. Yeah. Are we streaming on Twitch too? Get rid of all that BS. So this way. All right. But the point is sometimes there are catalysts out there that, the market isn't really focusing in on. And when that catalyst starts to make its move, it's like, wow, you get into the point where that business starts to get into, it's almost like rocket fuel. So I would say, if you look at most of the companies that have done extremely well over the last couple of years, do you remember Palantir? Its biggest moment was when they started doing AIP and boot camps.
Yeah.
Like that's when their growth started to really accelerate, right? For Rocket Lab, I guess it was when they had some successful launches. Like, I don't know exactly what the trigger point was for Rocket Lab that made it go from like $4 or $5 to like 20 something. What was the trigger point?
There were several. It was kind of accumulative, right? I think it was a lot of getting closer towards profitability. They're not profitable yet, right? But getting closer towards it, having a line of sight to it and stating that line of sight, getting closer towards the Neutron launch, having several. It's been an ongoing piece, but I think the majority of it has really been associated with Neutron. And I mean, it's not like we've just started launching rockets, right? They're about to launch the 67th one tomorrow or 2 days from now. So in that respect, like by the time they went public, they were already at 17, 18 or 19 launches. So I think it's literally just been consistent execution over time, I think is the best way to put it.
Got it. But there weren't any like major contracts that kind of came their way that like said like, hey,
there were multiple. There were multiple, right? There was like, hey, we have this space development agency wanting to let us make satellites. We're now a prime contractor for the Department of Defense. Like all these different small catalysts throughout throughout time.
And I think that's the thing, right? If you want to have these rocket ship kind of moments, these catalysts are something that you have to keep an eye on. And for me, when I saw that with Oscar, it blew my mind how interesting this was when it came to what this bill would mean for Oscar and its future growth. Like, it's not that they weren't growing before this. Clearly, they were still growing. I mean, they've got up to $9 billion, but why was it valued at $3 billion market cap with that kind of growth? Well, one of the reasons why is because from an operating income standpoint, they were still negative. You know, if you're losing money as an insurance company, you can only do that for so long before you go bankrupt, right? So it's makes sense. Now they're generating real operating income, and they've got the tailwind of people possibly moving from Medicaid over to the ACA because Medicaid is being somewhat, I don't want to call it cut, but there's changes that are being made within the House, the Senate bill. And I think that's what triggered the upward move the day before yesterday. And then I think we covered it. And I think that some of the market kind of woke up to it and said, wait a second, no, this is actually really good. And I think part of it is also just people chasing too on Twitter. Like, it's just been a lot of people kind of talking about it. And, you know, it's one of those things, because I've seen that happen too, where some people have been kind of pumping one thing and they've got a thesis behind it. But then that thesis, if it never plays out, then you're kind of sitting on dead money for a really long time. Like, do you know how many people are like still on Clover? Do you know what Clover is?
I do.
A Chamath SPAC.
Yeah,
you know. Yeah.
I invested in the SPAC, but I think I made my money and got out. I mean, I don't remember.
Yeah. So Johnny Mac is a good question. Is Oscar more of a long-term hold or a trade for you, Chris? So I would say right now it's probably going to be a long-term hold, only because their business model is in like growth trajectory mode, right? So when I look at a company for long-term holding patterns, right, I look at the business and say, okay, is this a cyclical business, or is this a business that has durable growth going for like the next like 10, 20, 30 years, whatever? And then at the same time, what is the valuation on that growth? If it's too high of a premium to get in on that growth, where literally I'm paying 5 years ahead for a valuation, then yeah, it's not really that worth it for me to buy it right this second. But if my time horizon is 5-10 years and I'm looking at the company now, and it seems like all the hurdles that usually a company has to go through, once it hits, it's almost like escape velocity, right? With a rocket. Once you hit escape velocity, then the business, you buy it and you can just hold it for the next 10, 20, 30 years. If it's not a cyclical business. If it's a cyclical business, those are the ones that you typically want to trade, right? So businesses that are like, let's say like Tesla, right? With car companies. Tesla, at the end of the day, it's autonomous, all that good stuff, but it's still a car company. So there are going to be points where the economy is going to weaken and car sales will go down and the stock will go down, and then car sales will go up and the stock will go up, right? That's cyclical. You're going to have, but then you have businesses like once again, like Venture Global. Once they build out these things, they've got fixed contracts with durable up into the right businesses. And the thing is, if you get in very early into that kind of business model, it's infinitely scalable. It was the same thing with something like Dutch Bros. Dutch Bros got to a point where they have escape velocity now, and all they're doing now is just taking all their operating income, dumping it back into building more stores. There's more stores, more profit, more profit, more stores, more profit, and it just compounds on itself. And you know, eventually they'll reach a point where it's like Starbucks, where you'll hit like certain plateaus, right? But Dutch Bros is nowhere near that. So it's kind of like that. So when you're looking at a business or a franchise or anything, you got to focus in on that portion. So
for me, it's something that I've come to realize that I truly like companies that are smaller in terms of size. VG is an exception to this, but companies that are smaller in size that are either getting close to profitability or aiming towards profitability, or have just hit profitability. Because generally speaking, companies like Oscar, it's like, well, it hasn't been profitable for very long, but people have yet to recognize, right, that this is part of the business, right? There's fucking thousands of stocks. So it's hard to always keep track of every single one. I'm sure that people probably thought, you know, for example, on Oscar, hey, these guys are still losing money hand over fist, because it wasn't long ago that they were losing $200 million a year. even though their top line revenue was still growing like a weed. So in that respect, it's interesting that now you kind of hit these cycles. SoFi did it, last year. Within the last 24 months, it got the profitability and is now headed towards the S&P 500. Obviously, I think it might take a little bit more market cap for that to happen. But you have these companies that kind of hit this bottom tranche of, okay, now we're starting to aim towards profitability. And I think that that's kind of what's going on with Rocket Lab, coupled with, the huge potential catalysts as well. But to me, I think I don't want to say it's a niche, but it's a place where I like to play. And so when I saw Oscar hitting profitability, and somebody reached out to me.
Can you share my screen, Matt? Sorry.
My question was specifically around what are the risks and downsides associated with it? And to me, it was like, okay, I can easily see where a place where, in this particular case, it continues to do extremely well, and there's other things in America to focus on other than getting rid of the ACA, the Affordable Care Act, which is the marketplace in which Oscar plays mostly. And in that respect, it just was like, you know what, I'm just going to take a swing at this, right? If it hasn't happened already or was a top agenda, then I think it would be something different. I honestly think that there's obviously the war that's potentially looming. Whether or not what happens with that, I guess, is to be TBD. Hopefully nothing. And I just want people to be safe and stop fighting. But the world is the world, and that's probably inevitable. That unfortunately there's going to be conflicts. But after that, interest rates is probably the key thing. Business tax cuts. I think Donnie at this point has gotten the individual personal tax cut piece done. But in terms of priority, I think the ACA piece is lower. And so to me, it kind of insulates that risk a little bit. It doesn't eliminate it, but it insulates it. So to me, I was like, you know what? I'm willing to take a gamble. And in terms of answering the question as to whether or not it's a long-term hold for me, I was expecting, this is the problem. I can easily see a double out of the company. Just based off of its really cheap valuation, the fact that it's probably going to pull in $1 billion into EBITDA this year or close to it, at least 650 to 700 million in EBITDA. So if that's the case, it's like you kind of scratch your head. Like, what's an appropriate price for something like that? I would say multiply it at a minimum by 15x. But at the moment, the company's not nearly being valued at that. So in that respect, it would probably put it at a $10 billion market cap. Now think about it, 2-3 years down the road, you're generating 1.2, 1.5 billion in EBITDA. What do you 20 billion? So it kind of gets you to think. And I don't know where the buck stops. The thing that I don't understand is these guys are really targeting 20 to 25 million of basically clients that are in the ACA system, but who's to say they have to be specifically in the ACA system, right? They can go after other opportunities as well, but it gets you scratching your head, right? They are exiting certain states where they're not making money. So, I mean, they're making sure that they're not just giving money away for free and losing money to excess premiums being paid out, or not premiums, excess. What's the word I'm looking for, Chris?
What do you mean, like medical costs?
Yeah, excess medical costs being paid out. So like that's why they've left other states in the past. They just couldn't make those states work. So anyway, I think it's an opportunity. I still need to dive a little bit deeper, but I thought at least for now it was good enough to get my feet wet. I'm still establishing the narrative at which I truly think what my long-term opportunity is. Now, if it goes up 150% in the coming months, then I might just take a profit. It's not one of those companies I was planning on making a completely foundational position in. I mean, I would prefer to put money into something that, in my opinion, is a little bit more foundational. But my opinion could change as I do a little bit more diving and I listen a little bit more over the coming quarters. So yeah.
Yeah, so let's take a look at the portfolio, see how we are doing, and just weigh that against the S&P.
I don't have it ready yet. So,
all right. So, yeah, I mean, this is one of those few markets where there's really not a lot of opportunities out there unless you get these really big singles. And I think we've got a couple of these singles done. But other than that, there's just so much uncertainty in the markets. We could talk about Jay Powell a little bit today. The Fed was very, 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 very hawkish in their outlook for the future. I'm not so sure that I agree with a lot of what these guys are putting out there. I mean, the data that I'm seeing shows that there's a lot of inventory on housing, and then you've got all these deportations, like you've got 1 million people self-deporting. All of this stuff screams disinflation, if not deflation, next year. So my thinking is the Fed missing something that they're not necessarily, like taking into account? Or is it really political bias? I personally don't think there's really political bias. I think it's just over caution, right? So one of the things that they kept mentioning was the tariffs. Don't worry, the tariff increases are coming. The CPI is going to go up. Tariffs are, so the Fed has it in their brain that the tariffs are going to cause inflation. And it's because of that, they are essentially being a little bit more judicious with these rate cuts. Now, do I think the tariffs are going to cause inflation? I think if we got the Liberation Day tariffs, 100% we would have got inflation. There's no doubt in my mind. You put 150% tariff on most of the products that are coming into this country, you're going to have crazy amounts of inflation. But if you take a step back, if you look at the current tariffs that are out there, the amount of carve-outs they have for all these tariffs that we do have, and then on top of it, you look at the total GDP that we have and how much it's actually imports. It's about 4 trillion, right? And from that 4 trillion, I think about 3 trillion is exempted from a lot of stuff. And then the rest that's left over is charged between 10 and 20. So you're looking at maybe generating a revenue of 200 to 250 billion a year for the government, which is what their projection is. So if that's the case, then that makes me think, like, wait a second, like we have a 37 trillion dollar economy. Is that really the big, like, oh my God, inflation thing? Like, no. And especially if you take other parts of the equation, the dollar weakening, that also means our exports are going to go up. Why? Because the weaker dollar means, the price that we're importing at just became cheaper because the dollar is weaker, right? So it's this weird system that we have with the Fed. And I think now we've gotten to the point where Jerome Powell is basically, he just does not want to be Arthur Burns. So he doesn't want to cut rates sooner than he has to. He knows that this is his final term in office. So his thing is, I'm going to protect my legacy. So if you ask him, who do you want to be? When people look back and they say Jerome Powell, they want to remember him as the Paul Volcker of the generation, not the Arthur Burns. And in that regard, Donald Trump is saying, hey, we need to do 100 basis points cuts. And if inflation does rise, then you can just raise rates again. And Powell's like, no, then that means that my legacy is all screwed up. I'm not going to do that just to make it easier on you and your tariff BS. I'm not going to do that. So this is where, things are just very interesting. So yeah, we'll see. We'll see where things go.
All right. Well, putting our money where our mouth is, I think the big elephant in the room, Chris Patel, VG.
Yeah, we've done well. Venture Global has done well.
So I will say with a caveat, so there were, I forget how many shares, but as you know, this was a very large position. We sold some of the, you can do select share sales. And so the only thing that I sold was like $100 or $200. So maybe like 5 or 10% of the whole position that was negative. So those were the shares that we bought kind of like day 1, day 2 of post IPO. So those are the only ones that were negative. I think we were only negative like 5% or something like that. So that was nice because obviously we don't have to pay tax on that. And I think we put that into Next or something like that. So we doubled up the position in Next. And then we initiated a position in Oscar. We had TLT, which we decided to dilute and get rid of. Looks like we have the Venture Global $20 calls for next month. That's an oopsie, but I think it'll settle down at some point. I think we'll be okay with that. But either way, I think we got $130 in the account for that bad boy, so that was pretty nice. And then we doubled up the position in UNH. I think we had about $400-$500 in UNH, and we added another $250. So other than that, we did also sell Celsius. So Celsius was one of my brainchildren. Chris was like, why are we buying Celsius? And I think it was like when it was like low 30s. And I think we got our cost basis down to the high 28, 29. It wasn't like mid. And if you guys remember, Celsius got down to like the low 20s at one point. So we didn't perfect that one. But at the same time, we still did really well with it. I was cautiously optimistic on it because I was just looking at the numbers. And I didn't think the company was going to implode, right? I mean, I still drink Celsius. I know many others do as well. Was the hype over? Yes, the hype was over. But at the same time, they're still merging with Alani. So I think it was a great opportunity. And honestly, I don't think it's a bad, how do I say this? If you're looking for something that's like slow, steady, to my opinion, hopefully doesn't get in the situation that it did last year. And is this like a slow and steady, potentially wins the race, maybe 10% a year sort of company for the next 5 years? I don't think that's a bad one. They honestly, and I guess the thing I'm curious about is when they finally merge the two companies. But the pro forma, when they announced the merger in the first quarter, looked very healthy. So once they finally done and dust that one, I wouldn't be surprised if they continue to go compete with the Red Bulls and Monsters of the world. Monster's way ahead, in my opinion, but well, not even my opinion, just by the numbers. But overall, I think Celsius will be a good one. But we're still holding on to the big boys. So we still have Carnival, we still have Bitcoin, we still have Norwegian Cruise. What else is there, Mr. Patel?
ASTS. You forgot about one of our best performers in the last 2 weeks. So that was, so here's the funny thing about this portfolio. There are times where I will suggest things and they're clearly a misstep and Matt will correct me. And then there are times where, Matt will be like, nah, I don't think so. And I'm like, no, we should.
And let me ask for the people that think that I am a Bond villain in the ASTS community, how much pushback?
You're not a Bond villain.
How much
did I get? Of pushback. You get a lot of pushback.
But how much did I push back on the buying ASTS in the portfolio?
You didn't. You didn't give me any. You didn't. You were reluctant because
the first time
you don't like the mob. Yes. So that was your reluctance.
But you asked the second time,
right? When I asked the second time, you said, "Sure, let's do it," and that was it. Yeah.
But I won't say. But I did. I did save Chris a little bit. In one of our recent plays.
I did want to sell a little bit of Venture Global from.
I wasn't going to call you out. I wasn't going to call you out.
I was like, hey, maybe we should sell a little bit because
it was already up. It was up
right now. 44% of our position in this portfolio is Venture Global, which is not fun. Okay, that is being like, if you want to be a fund manager, okay, and we are striving one day to maybe. I'm not saying we will. Maybe one day go into that kind of realm. The one thing you don't want to do is have a concentration, at least as a good portfolio manager, have so much concentration in one position. And especially when that one position has there could have some challenges because of things that could happen, right? So that's the one thing. If this is like a blue chip company, like your Facebooks or your Googles, yeah, you can maybe go a little bit really hard on it. But when I saw like, hey, wait a second, our portfolio position is now almost 44-50%. I went to Matt. I said, hey, maybe we should take a little bit and just move. And Matt's like, absolutely not. We're keeping. So I said, at least
I'm a little bit more comfortable. If you were to say that today, I would be a little bit more comfortable. And so that's why we did trim 5%. I actually wanted to trim a little bit more, and something came up. Somebody called me at work or something like that.
Yeah.
So I honestly wouldn't mind trimming a little bit more. And it was by design, right? I mean, we went heavy into it. you
We
basically mentioned, I mean, our cost basis is $10. So like we didn't get
we
perfect,
brought our cost basis down by a lot.
We did,
because our cost basis was 17. So I called Matt. I was like, Matt, I'm sending you money. We're buying Venture Global. Let's go.
Yeah. So it ended up being a good opportunity. I mean, at the time, like the portfolio got down. I don't know if it got below 85, but it definitely was in the 8s not long ago. And the majority of that, because Venture Global was negative for us guys. So, you know, not too long ago. So really that $2,000 gain that you see there is really just in the past couple of weeks. So, I mean, it was by design. I did think that we would have a retracement to the norm on that one. I did think it was super oversold, but at the pace at which it's recovered, I think that, I mean, 80% in the last month is what the graphic said this morning. And it might be even higher because we had a good day today as well.
Just remember, guys, Venture Global at these prices, I'm not saying it's overvalued. It just depends on how you look at this thing, right? So
agreed.
Right now, it's a $44 billion company. When this was $7, it was a $20 billion company. So it's a big difference on what you're buying. So when you're buying at 7, 8, 9, 10, you're buying a much smaller company. It's gone up 100%. So just keep that in mind. Now, if you do your calculations, depending on your time horizon, it could make sense to hold this forever. But if you're like trying to outdo the market, whenever the valuations get too extended, you kind of want to dial it back a little bit, right? Some people shouldn't do that. Some people should just basically buy a good company and just hold it and never look back. Why? Because Palantir, like that's a good example for me. Like, oh, I was overvalued and I got out of it. It could have been a potential 20x for me, right? And it's not a 20x. It only ended up being like a 2x, 3x. And I thought I was a genius at the time. So, you know, things like that happen. Now, of course, I've made money on other things. I personally feel like, hey, I did the right thing as a risk manager, right? And made sure that I was decreasing my risk. But, you know, sometimes that you get proven wrong on that. So it just happens that way.
Yeah. I mean, I always try to,
sorry, go ahead.
I didn't mean to cut you off.
No, I said if Palantir pulls back significantly, then hey, I'll probably be a buyer again. You know, for me, it really comes down to one, what is the company doing in terms of growth? Where is it going to plateau? And sometimes the market can overestimate where this company, you know, like how much future growth people are willing to accept. Like in my opinion, if you're buying Palantir at prices around 140, 150, which is like a $300 billion company, that means that you're setting yourself up, in my opinion, okay, for 5 years of underperformance. Why? Because eventually those fundamentals have to catch up to that valuation. It's like those people that bought Tesla at $400 in the year 2021. Like they're still catching up to what the Tesla price is now. So the market has a way of, you know, overextending what the potential for a company is. And, you know, sometimes you get out of positions a little too early. And for me, that happened with Palantir. I could not imagine. Look, it was not on my bingo cards that Palantir would go and be like, what, a 200 EV? It's a 200 EV multiple enterprise. You know, it's crazy what it is, but it is what it is. Chris, you said the same thing when Palantir was $70. Absolutely. Even at $70. Look, $70 puts this at what? This puts it at a 70, what is it? A 70? No, not 70. $150 billion company with revenues of about $4 billion, right? And EBITDA of $400 million. So just think about all the stuff that you're paying. So it is what it is. Sorry.
Yeah, I think you really have to understand. I think a lot of what people do is they get too concentrated on the stock price itself. And a lot of times you have to think about when you're evaluate the whole business. And I still think I see a lot of people being like, oh, the stock can go to $500 a share. It's like, you realize, Playboy, that if it goes to $500 a share, that it's going to be like $1 trillion market cap. And you're talking about, I don't know, selling paper on Amazon, right? Like there's no reason it'll be $1 trillion market cap by selling paper on Amazon. So stuff like that, right? Where people just throw out ridiculous things. Now, the thing that's associated with this, I could easily say I think this is going to be over $100 billion company. So that's a 2.5x from where it is today. The problem is, though, that I can't quantify is how many share buybacks they're going to be doing in the future. In 20 years' time, will they have 2.5 billion in shares? Probably not. They might have 1.5 billion in shares. So in that respect alone, that'll increase the stock price by about 80% alone, just in that realm. So if you think about it, you're going to get a 2.5x. And I wouldn't be surprised in 10, 15 years time, if you were to look back, that 2.5x ends up being close to a 5x from here, right? From here, just based off the fact that you are now buying back a crap ton of stock, not to mention you're probably going to get a decent dividend as well. This company pays dividends. Venture Global pays dividends. I don't think people realize that. They have a way to increase it as well. I mean, they're only paying $140 or $160 million a quarter. Sorry, not even a quarter, annually. $160 million annually. And their EBITDA is going to be 6 or 7 billion this year. And that's before full run rate that we kind of have for Plaquemines in 2026. So anyway, I recommend people think about, this is what I try to tell people, think about the end, and people don't think, it's easier. Maybe it's easier for me because I have a little bit of experience, but I try to put the end in mind. Where do I think this company will be in however many years? Do I think it's going to be a $100 billion company, $200 billion company, etc.? Not talking specific about Venture Global. I'm talking about just in general. And if the case is that you want to make $1 million position in 5 years, and you honestly think it's going to 5x, you better be putting 200 grand in it. And I don't think people realize that. They're like, oh, I'm just going to put my $1,000. It's like, all right, man. So you put $1,000 in, you get a 10x, you're going to get 10 grand. You got to think with a little bit more granularity than just like, hey, Matt bought Oscar, on Monday, so I'm going to follow him. Or Chris did really good due diligence on Tuesday night, so on Wednesday and market open, and just throw like $5 at it. It's like, no, like if you honestly, I'm not trying to be mean. $5 could be a lot to somebody, even $1,000. But my hope is that you give a little bit more oomph and a little bit more really, what's the word I'm looking for? Shit.
Julie, I'm not dissing Palantir. All right. Like I said, I love the company. I don't like the valuation. And that's it. That's the only thing. So there are a lot of companies that I really, really like. I admire the mission. I think they're great companies, but I just don't like the valuation. So I stay away. And some people are okay with paying a crap ton of money for a valuation that they don't agree with. And the stock keeps going up. I mean, I still remember, me and Matt both got so much hate from the end phase folk. Oh my God. I remember being on Finance Junkies, and there were these guys just trolling me on Twitter. Like anything I would post.
I think it's why Vitaly hates me to this day.
I don't know if Vitaly hates you. I think that's a little too strong. But the point is, I feel like sometimes people, they look at these companies and they're like, this is my child. How dare you talk about my child? It's like, bro, it's just a freaking stock symbol, man. Relax,
And honestly, I can understand where somebody says that about Rocket Lab, because to be very frank, there is a 5-10% chance that for some reason, I don't think it's going to happen, but there is a possibility that for some reason it starts going sideways, and there ends up being some knock on wood, some massive cataclysmic failure where they remove all licenses and there's no ability for Rocket Lab to launch any vehicles, and they, for some reason, in that same capacity, lose their what's the word I'm looking for? Reputation in the satellite build community as well, because it trickles in, right? Something along those lines. But do I view that as very possible? Not anymore. And each quarter it gets less and less likely, in my opinion. But you don't know until you put the big bird in the air. So we'll see what happens with that. But that's the kind of stuff. The same thing with Oscar, right? I did the analysis where I was like, this thing could legitimately get completely appended if the ACA impacts. So I was like, the value to me needs to be, somewhat worth it. If it was for like a 20-30% gain, I wouldn't have put money into it.
So we should probably talk about some risks that Oscar has, because we did talk about good things on, I think, another pod, but here's a couple of risks that Oscar actually has that people have to make sure they take into consideration. number one is at the end of this year, the ACA, what happened was during the Biden administration, they did subsidies for the ACA, right? So if you were making a certain amount of money and you would go to the exchanges, those subsidies would essentially help you pay for those premiums. So a lot of people who are not low income, but like just slightly above low income, a lot of those people were benefiting from those subsidies. So they were able to sign up for ACA plans because of that. Well, this year, the subsidies end, right? So there was a COVID era program that allowed for more people to get enrolled in the ACA. So people, of course, utilized that and they were able to get healthcare. And Oscar being one of the big guys in the ACA, like really proponents, they benefited from huge member growth. Now, the question is, without those subsidies, what's going to happen? Now, the theory is, well, if those subsidies go away, then less people will have insurance and they'll leave, right? And in my opinion, I think what's going to happen is people will end up paying for their ACA coverage, but Oscar will likely, because it has some of the best as of right now medical loss ratios, they will be able to sacrifice some of that medical loss ratio, like, and basically capture a bigger percentage of those people looking for it. So if you look at the plans that are going to be out there, they're going to have some of the most competitive plans. And so even if their medical loss ratio, it, kind of goes from what it is right now, around 75 to, let's say, 80, which is what the requirement is anyway, they will basically be able to undercut the other guys. And so they'll be able to grow the pie for themselves. I think that's the plan. But like I said, that's a risk that people have to understand, that with the ACA subsidies going away, there could be people who are like, I'll just chance it. I don't need to get health insurance. Like I'll do whatever, so let me just show you guys what I mean by that.
What I will say also is like, because I think a lot of people are like, oh, Oscar, maybe Lemonade's going to do well too. It's like, no, like Oscar actually makes money. No offense to anybody that's invested in Lemonade. It still might eventually be something that works out, but it is, to me, looks unfavorable comparatively to Oscar. It has probably, it might be like 1/10 of the revenue on a quarterly basis, maybe even slightly less, and obviously has not made a profit. And the valuation is very comparable. Were you going to share something, Chris?
Yeah, I was about to, but
take your time. So yeah, in that respect, like, just because one company, it's like saying that Wells Fargo and JP Morgan are the same stock, right? It's like, it's not the case, right? One, you're paying a much higher price to book value. One, you're paying a lower price to book value, but one, is obviously way more profitable than the other. And so with respect to that, you kind of have to recognize it's like saying Snowflake and Palantir are the same, because they're somewhat comparable in terms of how they're assisting businesses with managing data and stuff of the like. It's like they are, but they aren't, and you can't compare one business versus another in terms of profitability, right? So just be cautious. I see a lot of people do that, right? Where they're like, oh, this company makes money and this company's doing well, so therefore thus this company. It's like, that can work, like space stocks, they generally flock together, but in the end, somebody's always going to get screwed, in my opinion. There's always going to be a one in the flock that was always sick and destined to die, or just doesn't hit its stride. I think like Astra, for example, is a prime example of some of these rocket makers and rocket launchers. Like, they just didn't have the oomph to continue, and so they eventually dropped out and died. So
yeah, one thing, it's so June right here says something important. One thing I don't want is discount healthcare. I pay premium prices to make sure I have extensive care. My premium is like $1,000 a month alone. So that's great, June, but a lot of people, $1,000 to them is like, it's like, holy crap, like that's a lot of money. So when you think about it, some people need these subsidies and they need some level of healthcare. So like this person right here, they did a profile on her on some news sites. Basically, she works part-time. She doesn't make like a whole lot of money. Her and her husband have certain medical conditions and everything else, and she was on the affordable healthcare insurance, and she qualified for some subsidies. So those subsidies were super cheap, and so extra subsidies put in place during the pandemic, which reduced their premiums. Morales and her husband paid by more than half to $30 a month. I mean, $30 a month for two people. She's probably on some like super bronze plan or something, or she might be on a silver or a gold plan, but she's got a ton of subsidies. So she may end up probably downgrading from like either gold or silver plan to maybe a bronze plan. And or because she has so much actual like issues, because it seems like she has a lot of things going on, she may end up having to pay out of pocket more. But these are the things that are happening in the background right now. So this could be something that acts like a headwind for Oscar, in that if less people are enrolled in ACA because they can't afford it, then that's something that we have to think about. The other thing is, it's something that Heinz is actually talking about, which is interesting. Sadly, healthcare quality is dependent on the most important people, the healthcare workers themselves. Low income healthcare, as in having your loved ones on long-term facilities and even veterans, quality is questionable. It's yep. I hit my out-of-pocket max each year. It's worth it to me. Yeah, I mean, like I said, everyone's gotta do what they have to do. Like, it's something that even me and my wife have to consider. Like, if we ever want to retire early, or let's say you, Matt, you want to retire early and you just don't want to do the rat race anymore, and you have to look for private insurance, you're probably going to go to your state's exchange, and based on your age, they're going to give you something. I mean, which one would you pick? Would you pick bronze? Would you pick silver? Would you pick gold or platinum?
I don't know. I would have to look at them all. I have pretty good healthcare right now.
Yeah, me too. Like, because I work right now, but the people who are not working, they're gonna have to figure all these things out. And so the paradigm right now is shifting. I think a lot of people, when they look at the ACA plans, a lot of people just choose like the bronze plan because it's the cheapest, and they think that that's okay. And then they get sick and they have to pay like a $10,000 deductible, and it's like, what? Why do I even have insurance?
Mm-hmm. So yeah, I mean, I just would caution people. I think also, I mean, a lot of people have been asking, VG, is it a time to get in? Oscar, is it still a time to get in? It's like, these things have run, and I wouldn't be surprised if there are pullbacks. But I guess it, once again, like Chris stated very bluntly, and I think is worth to state, is like, what is your long-term goal, right? If it drops 20%, are you going to immediately panic and sell? Are you going to add more because you see the long-term vision and you understand the company is delivering? Now, it's a different thing. I'm not saying if it drops 20% and there's a news flash of, hey, the Affordable Care Act's getting repealed, and you know what I mean? Like, there's differences. And I think people try to say, oh, well, Matt said always add no matter what. But it's like, if you're listening to the conference call and everything's still going in the right direction, but the stock drops 20%, well, is it because there's actually a fundamental shift, or is it just an overreaction? Now, I can understand if you're saying like the growth trajectory of the company just got cut in half, so therefore the valuation is going to take 20 more years. Well, of course, people aren't going to be paying for that premium valuation if you're growing at half the speed that you just were saying that you were a quarter ago. So obviously, rightly so, things are going to get cut in half. But it just takes a little bit of, rigor and understanding what the story is about each company. And I think when people blindly trade and get into investments or other stocks that people are just talking about on X or on YouTube, that's part of the problem. Is me and Chris have sat down and looked at the numbers and said, this looks good. And so if a number comes in the quarterly report and it doesn't scare us, but yet the stock is down 10%, we might add to our position. You might be freaking out, messaging me mostly because somehow my number has gotten out there, and say, Matt, I know you just bought Oscar. What's your next 5-minute price target, 1 year price target, 1 month price target, and all the rest? So anyway, just some food for thought there. I just want people to recognize is like you need to have a little bit of a backbone and understanding what you're getting yourself into. Don't just blindly follow. And I saw a lot of people like, ooh, I'm adding today, and it's like, dude, I'm not saying add VG today because it's already up 80% in the month, right? I'm saying for those of you that have been riding with it since $7, $8, $9, like some of you in the chat have. Like, congratulations. And honestly, I wouldn't fault you for taking your profits.
Whoa. Someone says Semper Fi. I'm not a Marine, bro. I was Army, okay? Not a Marine. Not Uncle Sam's Misguided Children or My Ass Rides and Navy Equipment. Not gonna have it's funny. That's like the Marine Army rivalry. They used to make fun of us. They're like, Army, it stands for ain't ready for Marines yet. So we used to say, Marines also, USMC, which is United States Marine Corps, also stands for Uncle Sam's Misguided Children. Another one was you signed a motherfucking contract. My Ass Rides and Navy Equipment. There's so many, bro. And then the Marines get made fun of because like they're just a bunch of goons. Like you gotta have respect for the Marines, though. They are way, way more lethal than a lot of army units, and a lot of the army units are very pogish. Like they're like people other than grunts. That's what a pogue is. The Marines are all like gung ho, like PT studs, but they're kind of a little loose in the head. Like if you join the Marine Corps, you were probably touched as a child. That's how I feel about most Marines.
Jesus Christ.
You deploy the army, you unleash the Marine Corps. These guys are a bunch of animals, bro. You know, like if you were to say army is a bunch of like, I would say army is, so if you had to like classify all the services into dogs, the army is like a golden retriever or a Labrador. The Marine Corps is like your pit bulls. The Navy is your poodles. All right. And the Air Force is like your border collies because they're super smart.
What are the Space Force?
I don't know. Like I've never had to deal with that. That was too early. Yeah.
Too early to tell.
Yeah.
Interesting. Well, I did want to share for people that are interested the year-to-date return, which is on the left, and the trailing 12-month return, which is on the right. You can see the S&P is up about 2.5%, but this is obviously as of yesterday, so we don't have today's gains in there, which we did okay today as well. But the S&P is up about 2.4% in year-to-date. So congrats to everybody that's just hanging out in the S&P. You're still positive for the year. That's always a good thing. And the trailing 12 months, it's about just under 11% for the S&P. Well, we're outpacing that 26 and 66% respectively. So pretty good. It was not looking that way a couple weeks ago even. So Venture Global really helped us out with that respect, but a couple of the other positions too. It's not like Venture Global was the only position, but with it being 40 or it was like 40% when we first started it at that size within the portfolio. It's obviously grown to be almost 50%. We trimmed a little bit. So it has been the majority of the reason why the portfolio has kind of pulled itself out of a rut.
Yeah.
Cool.
Yeah, man. I don't know how this summer is going to go. I am just looking forward to chilling with you guys on next week because me and Matt, we are going to Mexico.
Yeah, man. I'm dragging at work. I'll say that much. Like, I'm pretty much just like, I love what I do, but it's been a while. I don't know. I mean, it hasn't even been a while. I mean, I was in, when was that? In March, I was in the Outer Banks. So it's not like it's been forever, but it seems like it's been a while just based off of how much I've gotten done at the office. And I have a lot of stakeholders, so I have to keep a lot of people happy. And so I just need a little bit of a break when I'm not taking calls from 4 or 5 different people that I'm trying to make happy every day.
Heinz, he's like, brush your teeth with bottles of water, bro. We're not going to like TJ and just hanging out in the slums. We're going to Cancun, man. They're all inclusive resorts. I think we're going to be fine. I've been to a bunch of all inclusive resorts.
I've never had a problem in Cancun. I really haven't.
Me neither.
That's interesting. Like if I was staying at like a random home or something like that, maybe. But a lot of these resorts, I always ask just in case, because I know people that have gone to Belize, and Belize is their tourism industry is a little bit more in its infancy. But when it comes to Cancun, every resort I've been to has always had a reverse osmosis as soon as it enters the property. Whether or not they just say that, but I've never had a problem. But that being said, what I will make sure that I still don't do is when I do brush my teeth, I don't ever swallow the water anyway. And when I shower, I don't swallow the water. But if they hand you a glass of water, I've at a restaurant, I never have a problem with it. I've never had a problem. But I also did live in Trinidad for a while, so maybe my stomach has become used to. Because for when I first moved to Trinidad, my stomach was not happy with me for a couple weeks.
Bro, I'm Indian, man. I've been to India a bunch of times. Okay, trust me. If you could, my stomach has been trained properly. All right. If you can survive the Indian street food, bro, you're gonna make it. You know, like my immune system has been boosted by all those. Dude, I sometimes I still watch these Indian street food videos.
I do too, dude.
I'm like, bro, does like the health inspector not exist in India? Like, what is going on, man? You know,
sometimes I'll watch some of them and I'm like, the person that's saying anything, like he's just watching, and I'm like, there's no way he's about to eat this, and he's like, they like get it, and they're like, thank you so much, and they pay and everything, and then they walk away and they immediately walk to a trash can and just like throw it away.
I think to me the funniest thing to see is like some of these white people when they go to India, they're like, hey, I'm gonna go to India, I'm gonna have like my eat, pray, love moment, and they go and they eat the food, and then like you see like 10 minutes later they're at the hospital, you know, with a bunch of IV bags because they're like, I don't know what happened, I just got dysentery. It's like, welcome to India, you know.
Jesus. I don't know. India is a different beast. Part of me wants to go.
India's like the final boss of vacations.
It is, man, and that's part of the reason. That and I don't want to say like no man's land China, but somewhat off the beaten path China I would like to test out, because that and Japan, I think a lot more people speak English, so I wouldn't get lost per se. But I like culture shock to an extent. I grew up very sheltered into the respect that like very American, chicken and rice and maybe some, you know, frozen veggies, maybe burgers on the grill, chicken on the grill, but nothing like I had Indian food for the first time probably like 15 years ago, when I was like in college, when I was like 19 or 20.
Y'all want to know some fun facts? My wife's mom is actually Zambian. So, and my dad, actually, he was a teacher in Kenya in his 20s. So he was there for a long time. Yeah, but there's a lot of Indian people who migrated to Africa in the 60s and 70s. Yeah, a lot of Gujaratis. Yeah. But they all got kind of like kicked out a little bit. So I think I wouldn't say kicked out, but what?
Why'd they get kicked out?
So Indians, you know, when they got there, they took on certain roles as like middle managers, like, you know, and a lot of the locals, they didn't necessarily like that these guys were coming in and doing really well. So if you go to like Uganda, there's a whole thing about Uganda. Like one of my friends' parents actually was in Uganda. The Indians owned a lot of the businesses, and Idi Amin, who became the leader, ended up getting kind of like pissed off and saying, we need these guys to leave. And so at the time it was a whole crisis. Like Indians were forced out of Africa. Well, not Africa itself, but Uganda. And then there's kind of this stigma that happened around Africa where people were, you know, like they would be like Africa for Africans. And so y'all need to get out. And so a lot of those people ended up migrating to the US. There's a really famous movie with Denzel Washington. I think it's called Mississippi Masala. It was a really, really early movie. Let me see if I can find the trailer to it. But it speaks to how like people migrated from different things. So I think a lot of people ask like, oh, how come there's so many Indian people here like that came here in the 70s and 80s? A lot of them were like refugees from African countries. Like one of the interesting things, which I didn't know before this weekend, was Shyam Sankar, who's the CTO at Palantir. His dad was actually had a business in Nigeria, I think, And he had the same thing happen where he owned businesses and they pretty much told him at gunpoint, you need to leave. And so they ended up coming to the US. And, Sham was raised in the US and he ended up, now he's in the army. So it's there are situations where people will be put in a very difficult position and then they have to kind of like make some decisions. And it was great that this country and the UK and a lot of European countries at the time were very welcoming of these Indians that came over at the time. So, so whenever I see the situation with refugees, it does put me at some level of like, hey, listen, maybe not everyone's a bad person here to just take your jobs and steal from you. Like these are people who are actually escaping persecution, And the thing is like, people be like, oh, just go back to India. And it's like, bro, they've been there for like generations. Some of these people, like 3-4 generations, so it's an interesting dynamic.
I do want to give a shout out to one of the people that have been following me for, I don't know, it's probably been 5-6 years, but my buddy Kev, I'm not going to put him on the spot. If he ever wants to like introduce himself on Twitter or X, or I don't know if he's watching, but the guy has been a phenomenal investor, has really put his feet to the grindstone when it comes to just socking away capital every single month, which is something I preach very religiously. And the dude just bought, I mean, I don't want to say how big of a house it is, but it's a very modest size house, better than the average American. I will say that. So in that respect, the average American home price is X. He's doing very well for himself, much better than that. And it's about part of the reason why, that I think that this investing thing is really awesome. He literally was just like, even though I'm taking away from some of that massive work that I've done, I'm buying a house for me and my family, my future family. And he has a beautiful family already, but he's probably going to have a bigger family even. And that's what it's all about. And the fact that he still has hundreds of thousands of dollars still, even though he's taking this brief step, and he's not losing that money, right? He's putting in equity, right, into a home. And so to me, I think that that's just a huge testament. It was really something personal for me. I do see that in the chat from time to time, but this is somebody that I actually message with several times a week in a separate chat, kind of like how we have our stocks chat with me, you, Steve, and Amit and Ken. I've had this chat with these guys for the past several years. And so just big shout out to him. And as always, that it's a huge testament to, if you guys really put your feet to the grindstone, then you can make ridiculously crazy things happen. I mean, Chris, I've seen you make millionaires out of nothing on your channel. I don't know if I've done that on mine, but I've definitely done I've seen some phenomenal things coming out of my channel where people came from having $50,000-$60,000 portfolios to having multiple six figures and on their path easily to becoming millionaires in a matter of a couple of years. And it just goes to show me that, we don't get everything right, but the principles that we're talking about, not just, picking perfect stocks or whatever, but just making sure that you're continuously adding and keeping track of your risk, knowing your strengths, knowing your weaknesses, it really helps out. And so awesome to see. It was really lighthearted, made me extremely emotional seeing that, because it was somebody that I actually communicate with, and to see his life, kind of grow up, you kind of feel like a proud father, even though I don't know what the hell that's like. But so it's nice.
Just to clarify, Zoe, my wife is Indian and her mom is Indian too, but they immigrated to Zambia like generations ago. So technically, yes, she's Zambian, but she's not like Zambian. She's Zambian Indian. I know that that's a little vague, but that's what it is. Yeah.
I don't think we hit the membership button. I just checked on, and it's still there.
All I got from Chris was a Warhammer addiction. Welcome. The Emperor Protects.
Never played it.
You've never been, dude. The Warhammer lore is amazing. I love it. Like, everything from like the founding, what do you call it, with the Emperor of Mankind. If you get into it, bro, that's it. I'm not into like the board games or the figures and stuff. I just like the lore. Like Warhammer lore is amazing, dude. Like and it's so extensive. It is a little bit dystopian though, so just be ready for that.
Yeah. And as much as I would love to make an ETF, Chris alluded to us managing money in the future. The thing that bothers me is like when I initiate a position, like I get like 8 messages directly, and people are like, "What do you think the price is going to be next week?" And it's like, dude, I don't know, right? Like it could go to 0, and so that sort of stuff is like, really, like it makes you not want to share anything on the internet.
I've decided we're not doing an ETF. Screw that. ETFs are not worth it. I'll tell you why ETFs are not worth it. Number one, the upfront capital cost is way too much, and the amount of money that you end up having to spend personally to get an ETF to work is not justifiable unless you got like $1 billion in assets under management. Like literally, if you don't have like, we ran the numbers because me and Matt spoke about it. Literally, you're not going to see a dime until you hit like $50 to $100 million in AUM. Like you don't see any money, like zero. And then if you for no reason, and then if you end up getting to, let's say, $200 million in your ETF and you actually do make some money, it's not enough to quit your day job because the management fees, a reasonable management fee is like 0.75 to maybe 1%. Right. And so it's like you're putting in all the effort, you're putting in a lot of reputational risk. And what are you really getting out of it? A couple of $100,000 a year. It's not worth it to do that. You're better off actually just managing your own capital. So maybe one day it'll be like a private hedge fund. Maybe something like that could work out where, you have to limit the pool of people that you're going to be able to take on. But it's worth it because you can, one, have a more direct connection with the person that you're investing with, and you're not spending time with like managing a whole bunch of things. And not to mention, like, you're getting compensated for a good portion of your time that's actually going to be committed to that, even with a low AUM. So let's say you have like a $20 million AUM, right? You can still theoretically make enough to quit your job, so.
There are some ventures that I've been thinking about, and whether it be the Airbnb thing or whether it be there's a couple other business ideas I'm throwing around, and with that, I'm trying to think if I can steward capital in that way, which would be helpful, that don't have the upfront costs and regulation. And it's not because I'm trying to scam people. It's just because the overhead piece is just like Chris stated. It's multiple, what it's at a minimum going to be $100,000 a year at a minimum, and that's probably light for an ETF. And so in that respect, it's just not worth it.
Then you have to get insurance if you get sued by people. Then you have to put yourself out there. That's why Meet Kevin closed his ETF. I mean, and Meet Kevin has a ton of presence. Me and Matt we got like a couple of thousand people on YouTube.
No, I don't think it's a surprise. I think if you were to combine our net worth combined, we probably wouldn't even get close to Kevin's. I mean, Kevin, at one point was, last I checked, at one point he was over 13 in stock, and then his real estate, and then I think he combined the two. So I think he was at least over 20 at one point. So I mean, combined, I don't think we're anywhere close to that. So
and not to mention, I mean, the amount of stress that you take on when you're managing other people's money, it's different. It's a different game. And I think, believe it or not, one of the reasons why I think the hedge funds have been underperforming retail investors is because they're managing money and they have to follow those managing money rules that you don't have to if you're personally investing. Like if you're personally investing, you can be 80% leveraged in one company and be like, whatever, it's my money, who gives a shit? But if you're 80% in one company and it goes down 20, 30%, and now all of a sudden you lost your investors that money, like people are going to hold you responsible. So even if you have super high conviction in something, just the fact that you're managing other people's money may end up distorting your overall performance, So.
Yeah. I mean, if anybody is curious, I mean, I have thought about in the past setting up a syndicate, and it's something my sister also really likes the real estate side of things. And so I've thought about setting up a syndicate of specifically kind of like what I do with my current Airbnbs, which is just put them on Airbnb and make money. And then, with a syndicate, of course, what it would be is I would probably buy the property first. And then once it kind of gets cash flowing, I would sell portions of it, get pretty much all my money back out, and then retain a piece of ownership by putting the deal together, but have people buy in. And the hope would be that obviously you get to share the cash flow. I retain a piece of ownership in it. With that, obviously we would be managing it, and you would just get a check if there's profit at the end of the year. Which hopefully there would be. I wouldn't go into it to not make money, but that would be something that's a lot easier for me, and I wouldn't have to get the SEC involved.
I didn't know that we had 40K fans in the chat. Yes, I did play Space Marine 2. It's still one of my favorite games to play. So I haven't played it in a little while. They just did a new update. But yes, Space Marine 2, amazing. Have you played Space Marine 2?
No.
No? Man, we gotta. Yeah. One of the
I've been
things
playing a lot of World of Warcraft, unfortunately, and that's Steve's fault.
Do you want to get a Nintendo Wii and play Mario Kart with our followers?
Steve actually poked me about that he wants us to like play video games together, and I would need. I love my friends, but I would not. And this is the thing. He's like, why don't you just stream for your fans? And I'm like, because if I play video games and I'm playing with my buddies, they'd expect me to be in Discord with them. And while I love my friends, I don't want to subject them to a bunch of people they don't know, right? Like, you know what I mean? And also, I don't want them to have to filter themselves, right? Like, you're dealing with a group of people that have never been on stream before. So, so anyway. I wouldn't mind.
You know what? Screw it. Let's do it. I'm down to do it. I was thinking, look, for guys, sorry girls in the chat if you don't know this, guys, we just need outlets sometimes. You just let things out. Like our brain is always thinking, how do I conquer the world? How do I conquer the world? Like I wake up in the morning while I'm taking a piss. I'm like, is today the day that I become president of the United States? It's like, nah, it's okay. And then I go back to peeing again. Like that is the mentality that most guys have. Like we literally wake up in the morning thinking, how are we going to conquer the world?
Yeah.
So
it's honestly why I've been in a slump. I don't know if I did a stream yesterday, 2 days ago. And I was like, I've been in a huge slump because I don't want to say this is going to sound very cocky. And I don't mean it this way, but it's going to come across cocky. It's like, I've kind of conquered my domain that I'm like in day to day. And I'm trying to find, just like 2 or 3 years ago, when I really started to kind of hit my stride in the stock market, I'm really trying to find that next like terminal velocity to get out of my current comfort zone where I'm learning again. I'm, struggling. I'm, you know what I mean? Like I haven't had that like Matt struggling sort of like stretch in, get to the next level thing. It's like, I'm sitting at level 9 and I want to get to level 10 or 11 or 12 and I'm kind of stuck, right? It's that sort of thing. And hopefully people kind of relate to that. It's like, I'm sure people have been like, grind, repeat. And they're like, this is stupid. And next thing you know, like you feel like, oh my God, my brain's expanding. My whole world has opened up, and if you haven't, I hope you find that feeling someday because it's a really unique, interesting feeling. I've had that a couple times.
Maddie, after we get back from Mexico, we're buying a Switch and we're gonna do, I think we're going to do it. We're going to do Cashflow Chronicles and we're going to talk about stocks, but we're also going to play video games at the same time. And if people want to join us, I don't know how the joining system works, if we have to give them like a code so they could join us on the thing, but maybe people can kind of join us and we could play different video games. I'd love to do that. I'd love to.
I don't know how to do it, but
we'll figure it out. And we'll stream it on Twitch or something so that
the streaming thing is not hard. I could stream anything, but how we would co-stream it,
when I was a kid, I used to go to my friend Henry's place all the time. I used to play Smash Brothers, and I was I was crazy good with NES. I know a lot of people.
See, that's a game that you could co-stream, and it's the same thing for everybody.
Yeah, NES was, dude. I used to be a hardcore NES player. Like people hated me because of that shit. Yeah, well, let's do it. Let's do it. It'd be fun, man.
I mean, that's the thing is, it's like as much as I would love to sit and talk for stocks for an hour, it's like I feel like it kind of gets boring, and to be able to, not boring to me, it always flies by for me, but I think having that ability to stream longer and actually play video games, and people love it. I watch video games all the time on YouTube and Twitch, so hopefully people would get enjoyment out of that.
Yeah, it'd be fun. Did you play Smash Bros when you were a kid?
Oh yeah, Smash Bros was it.
I'm talking about like Nintendo 64. Someone's like, "Oh, play with Marth and Mario, bro." I don't even. Marth wasn't even.
Who is Marth? You mean Martha? I don't know.
Yeah, no, I'm talking about like original Nintendo 64. Like,
I'm not talking the Brady Bunch.
The four games that I loved in my youth. One, of course, was Super Smash Brothers. Another one was Star Fox. I used to be a big Star Fox
bro. Yeah, I could never beat it. I was too young. I was like,
you couldn't beat Star Fox 64.
I was like 7 years old.
Oh man, I forget that I figured that you're younger than me.
Yeah, I'm only 30. Well, only 34.
GoldenEye. Oh, GoldenEye with what's his name? The guy that threw his hat at people. I forgot. I used to, with the golden gun, bro. That golden gun used to piss me off because a golden gun was like one shot kill. So, man, those are the days. You're just chilling with your boys playing games. Zelda was good too. But
Zelda was really good.
Yeah.
What other one on
Odd Job.
Yeah.
I used to pick Michigan as my guy.
I don't remember who I would choose. But I think you can. There used to be an emulator, like an N64 emulator, you'd be able to download and play on more recently. Maybe we could download that and see what that gives us.
Counter-Strike. It's funny. Me and my buddies, we actually used to go play Counter-Strike at a gaming cafe. Right, at gaming cafes, they used to have be super T1 like connections and everything else. We used to go play there. We could play online, but it was laggy if you didn't have really good internet. So, who else? Chrono Trigger for SNES. Yep, when we were kids, we used to play that too. And what's cool about Chrono Trigger is that the ending would change depending on which actions you took throughout the game. And had so many different endings. Yeah. I used to play a lot of RPGs. RPGs were fun. Pokemon Arena, played that too.
Yeah. What was that Pokemon game that I started playing? It was Pokemon Arena. Then there was Pokemon Photo or something like that. And we take pictures of the Pokemon. I don't know. I had a blast with that, even though it was kind of stupid.
Yeah. Do you remember what's that game? The one that it's tricky. It's getting tricky.
1080.
Is it? No, it wasn't 1080, was it?
It was 1080, 100%. Oh no, there was a second one. So 1080 was a snowboard game.
Yes.
And then there was SSX Tricky.
SSX Tricky, that's the one.
Yeah,
I remember that. That was fun.
SSX Tricky was fun, but it was more like cartoony. 1080 was a legit. And then there was Tony Hawk's Pro Skater. There were so many good games out, man.
Yeah,
many good games.
Are there any what are some good games right now that the only games that I recently played, one, I still play Counter-Strike once in a while because and I just play Dust. I don't even play any of the other levels, just Dust. And I'll do a death match. And that's about it. I just need to turn my brain off for about an hour, so I'll just play Counter-Strike Dust and that's it.
What's another one? I played, what was it? It was Space. No, it wasn't Space Marines. There was one that I downloaded.
StarCraft?
I
used to be a big StarCraft guy.
StarCraft, the MMO
RPG? Brood War. Yeah, I used to play Brood War all the time, man.
I downloaded Warcraft 3 because Steve convinced me to download it, so I played that a little bit for the past week or two. But I'm awful at it. So, what was the other one? I would love to play StarCraft. StarCraft, actually, I was a lot better at StarCraft, I feel like. At least for campaign, I was. And then, what was the one that I'm thinking of? It was a Marine game that came out in the last year. Not a Marine game. It was like Space Marines, kind of. But
Halo?
No, not Halo. Although I have been playing Halo 2 as well. Not Halo number 2, but Halo Infinite recently. Because my buddies wanted to get back into it, so we played that for. Man, what else was there? I forget. I would have to double check, but it was basically like you go to different galaxies and different planets, and you kill different types of aliens and stuff like that. It was kind of like Starship Troopers, but real.
Metal Gear Solid. Loved Metal Gear Solid. Yep. I didn't like it after like they introduced Raiden. But before that with Snake, it was good. Yeah. They got a little too crazy with Metal Gear. I'm trying to think of anything else that we used to play when we were. I don't know. I'm running out of games that we used to play. Final Fantasy. I played all the Final Fantasies. 10-2 was like I think the last Final Fantasy that I really got into. I didn't really play any of that. I never played the MMORPG. Yeah. I know a lot. This is going to sound controversial, but I like 8 more than I like 7, which is like blasphemy in the Final Fantasy, because technically 7 is like quote unquote the masterpiece. 8 I thought was better. I liked 8 more. Yeah. Fist of Fury, Helldivers 2. Yeah. GTA. Oh God, Grand Theft Auto. By the way, that's why I picked Take-Two in my portfolio. You want to know something though? I messed up. Last September, when I saw the trailer come out, Take-Two was still about $170. I was like, maybe I should just buy some leaps on this thing. But the thing is, I got scared because these guys would keep pushing the damn date, so I never did it. Now this thing is like 200 something, and I'm like, man, should I just buy it? In my personal portfolio. I don't have Take-Two, but I'm thinking about it. So if, let's say, when is the release date? Next May, right? Next May.
Yes.
So if we get to September, I'm going to see what the options chain looks like. And I might buy some spreads on Take-Two. Because I think GTA 6 is going to be amazing.
I think it is too. I think the initial event might be a sell the news, but depending on how much income they make after might move the stock again. I don't know. See,
the thing is, Take-Two, let's just look at it from an investing standpoint.
Who is winning the draft? Do you know?
Say that again?
Who's winning the draft right now? People are asking. And I'm actually curious because I think I'm winning.
You're definitely winning. You got Oscar. You're up 20% on one position. My biggest position gainer is Marvel right now. Marvel. That's it. But you've got Oscar. You've got ASTS. Bro, you're asking just to freaking show off. Okay, so let's.
It's not a competition,
you don't have to.
But,
It is a competition. What are you talking about? You're just gloating right now. You're just gloating right now.
I'm off to an early start, but I'll probably get surpassed at some point, or take a massive dip at some point.
You're like the hair right now, bro. Chris' portfolio is coming back. All right, go to the slides real quick. Okay, so Take-Two Entertainment. Let's all just kind of talk about Take-Two. Take-Two is a video game publisher, okay? And the thing is, the good thing about Take-Two is that people just think of maybe 1 or 2 games that these guys have, but they actually own a lot of other things also. So let's kind of just look at the thing. So right now they bought Zynga. So Zynga,
thank you for becoming a member, Melanie.
For all the mobile games, they have that as well. So this is their thing. But here's all the portfolio things that they have. Grand Theft Auto, huge series. Oh, BioShock. Yeah, that was a really good one in PS2. Was it PS2? Yeah.
Yeah.
All the NBA 2K, they own Midnight Club. That's right. All of these things, they own Mafia. Red Dead Redemption especially was really good. But then they also own all of these what is that thing called? Mobile games. I have to find which game publisher owns I keep calling it Farmville, and my wife gets pissed off. It's not Farm. It's called Township. Bro, she's addicted to Township. She plays that shit all the time. And I'm like, what are you doing? Like, there's dishes to be done. Like, why are you, are the dishes? We're going to go find out. She's probably playing Township. So she'll do tasks for her stupid city, but she doesn't do like the work at home.
Yeah, you're about to get locked out of that bedroom.
I don't care. But she plays Township. So I gotta monetize that, but she loves Township. So I gotta monetize that somehow. But yeah, so they have huge development possibilities, but their main driver in the next like few years is going to be Grand Theft Auto. So Grand Theft Auto, the amount of units that these guys sold is insane. Okay. And the amount of money that they're looking to basically charge, I think is going to be, almost $100 for this thing. I have to look at what the price is going to be, but it's going to be a significant driver for these guys. And I have to look at their compensation, because there is, I think, some provisions in their compensation that's linked to actually share price increases. So I might actually use that as a target for what is that thing called? For a price target. So let me just see, actually, SEC filings. Take two. Filings. That's the last right here.
Okay, good. I'm messing around with the chat.
That's fine. Let's see. Compensation. Stock-based compensation.
Yeah, the sorry, for people that are looking for members, the mobile won't let you do memberships as far as I know, but if you do on desktop, you can definitely find it. Sorry for anybody.
Okay. Okay, so right here, can you guys see the screen right here?
Wait, is beep beep on? I don't see beep beep.
BP.
Beep beep.
Oh, beep beep. Okay. Beep beep probably playing Township right now. Where was it? So all of this right here, these are restricted stock grants, time-based restricted stock grants you just issued in 2022 agreement. So we can take a look at this, and basically these are the vesting schedules. So 2025, 2026, and 2027, they're granted in fiscal 24. So I have to look these up and see at what price do these things end up triggering so that they get paid, because that is the incentive that these guys have when it comes to price targets. So let me actually see if we can find this market structure 22 master agreement. Market-based RSUs. So if you ever want to see, like, these are the things for annual bonuses and everything else. So
thank you, Zoe Cold. You're the man, dude. Much appreciated.
Let's see. See, performance-based vesting right here. Stock ownership until earlier, right here. A change in control, blah, 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 blah. All right. You know what? I'm just going to research this on some private time when I have, and just go through this if I can find out what the price targets that these guys have. But basically,
there he is.
This is what it looks like.
BD Zo Cold with the 10 members. Thank you, good sir.
Thanks.
Much appreciated.
Thanks, Zo. Yeah.
We need to have our meetup again. It was good meeting Zo in person.
Yeah, it was actually really fun. We went to Top Golf. It's great.
Yeah, I stayed away from Top Golf. I don't remember why.
Yeah.
I think I just slept in or something.
Okay, I have to find out what this is, but this could be something interesting. But if you look at the business metrics for Take-Two, they do generate really good revenue and good profits, but a lot of their, actually, I'm going to have to open this up on another tab. 1 second.
I don't know. I'm just cautiously optimistic that it's probably going to take
longer than people are expecting.
Yeah.
Okay. So if you see this right here from a cash flow standpoint, they're negative $4 billion in net income. Okay. On a TTM basis. So you're looking at this, it's like, what the hell? Look at this for Take-Two. Insane losses, right? Well, one of them is the reason why is because a lot of it's asset write-downs. So whenever you have, like game publishing and everything else, the way that these guys really make their money is they have an asset and they slowly depreciate it over time. And so eventually they don't have to pay any taxes on that money. So you can see here from an operating income standpoint, they're only down 45 million. So it's not like a lot of money that they're down. CapEx, they spent 170 right here. So financing cash flow, they took on 590 million in debt. Net cash flow is about 475, not too bad. The key here is going to be around what is this thing called? GTA. So when GTA launches, they're going to have huge increases in revenue. And we have to kind of do an estimate of that. But if you can see here, their revenues have been sharply growing from like 2015. They did about 1.2 billion in rev to now 5.6. So right now, what are I have to look at the estimates for GTA 6 revenue. Yeah, like right here, analyst estimate would generate 3.2 billion in revenue in its first 12 months, with pre-order sales alone exceeding 1 billion. I mean, just think about one quarter. These guys, I mean, one year they'll generate $3.2 billion. And then there's supposed to be like some in-game features that like people will buy and do things with, like an entire economy inside of it that's supposed to be like a value generator going forward. So that's something to just keep in mind. And so I have to do more research on it for sure, but yeah, Take-Two could honestly be a very, very big thing in the future.
Thank you, Miss Melanie. Much appreciated. Wow.
Yo, stop doing so many memberships. Okay,
yeah,
guys, you don't got to do that. You guys are chilling. Don't do it.
You got to save your money.
Invest save your money. Buy more, buy next decade and don't look at it for the next 10 years.
I did actually want to ask you that. So I'll just keep this up here so I can gloat, temporarily, 3 days in, I'm up, everybody else is down. Just kidding. But, nice to see. I mean, I'm humbled so far. I didn't think that Oscar and many of these other companies would run so fast, but I'm sure I'll hit my speed bump at some point. But curious, we did talk about this for the personal portfolio. I've actually been thinking about it for my own portfolio. Sorry, we talked about it for the public portfolio. I actually wanted to get your thoughts about it for my personal portfolio. VG is bigger than my next position now. And so while I like VG and I think VG is something that I could hold, I feel like part of it's like, do I take a portion of that and maybe sell? Because I'm sure I still have negative shares that I bought during the IPO that I could probably take and write that off. And I'm sure it's a small part of the position because I added pretty substantially, and then just add to Next. Because honestly, I think that there's more upside in Next right now than there is in VG.
So I
don't know.
100% concur with you, sir. Right now, next decade, based on what we are looking at as, look, the one thing that I think a lot of people are missing when it comes to next decade is that these guys are signing contracts. I hate to say this, but VG, they need to sign some goddamn some spas. Because, like Woodside signed a deal today.
Did that?
I
didn't see that.
Woodside got a deal signed. I'm like, what the hell is going on here? Woodside is not even close.
Shout out Meg O'Neill.
Yeah.
Where's
so
Meg O'Neill? Oxy.
Yeah. So my thing is right now, Next is only what? MedSide. Next decade is only about 2.2 billion. Now, according to them, the distributable cash flow is going to probably be around maybe 200 to 300 billion for phase one. But once they combine the other terminals, it's going to go up substantially. And their ownership stake is going to be big. So, like, I don't think next decade is going to get a huge bid anytime soon, right? Unless, of course, you've got the catalyst for train 4 and 5, which are there. But in terms of like them actually generating any real return, you're not going to see that until at least 2027. So yeah, look at this. Woodside and Petronas signed a deal for, I think, 1 MTPA. And Woodside isn't even goddamn close to producing anything. Yo, what is going on with Venture, bro? They need to sign some deals. That's the next catalyst for Venture.
I don't know. I really am trying to understand it. I mean, I don't think this is a negative thing, but we were chatting about this the other day with respect to them pulling their Delta LNG. I don't know how much we want to get into it or how much you want to keep on a paywall, but we were talking about them pulling their Delta LNG application, and with that, then they put forth their Plaquemines expansion application ahead of Delta. So I don't know if that means they're getting rid of Delta entirely. I'm also kind of curious how much, from a Venture Global perspective, they have excess capacity. So I had no idea that Plaquemines even had the capacity to expand, how much land they had, etc. And so I've been kind of trying to do research with that as well, thinking about the original Calcasieu Pass project, the Plaquemines project, the Calcasieu Pass 2 project, as well as Calcasieu Pass 3. How much land is that initial investment going to be that they have planned? Because that's very well descripted, at least it was, until they removed Delta from the S1, which, it was supposed to be a pretty big one. The Calcasieu Pass 3 is supposed to be a massive facility. Massive, like 30, 35 MTPA. So overall, when you get actually up and running, it's going to be like 40 MTPA. So the equivalent of like a Sabine Pass or Corpus Christi. I mean, we're talking the size that Rio Grande's supposed to be potentially at full size. So, I'm kind of curious what's going to happen.
The one big thing that we have to somewhat be aware of, and I think this is why I'm so desperate to see some long-term spas signed, is this right here. Share screen. Bam. So there could be theoretically a supply glut coming our way for LNG exports. If let's say, like, there are certain geopolitical changes that kind of get unwound, then we got a problem on our hands, right? So number one is Europe with Russian gas has been supplanted by US LNG exports. I'm late to the stream, was playing Township. Dishes better be done when I wake up tomorrow. Get out of here. You know you're doing the dishes, girl. You know how this household works. I need to put a lock on
Your shoe's about to just come out of nowhere. Just fucking...
I'm gonna have to hold this door before she comes and beats my ass. I know punk. I'm not scared. All right. So what was I talking about again?
I don't know, but I'm waiting for
stupid beep beep baby. Lose my thought, bro. My train of thought. See, this is why I sold Palantir, because I wasn't thinking clearly.
This is why you have to put money over women. No, I'm just kidding.
Yeah,
that's bad.
It's funny. My wife was telling me about like how she's having like stressful days at work right now, and I said, "Well, I don't think women should be working anyway." And she's like, "Oh, really? Oh, really?"
You should blame your feminist counterparts in the 70s and 90s.
Yeah,
here.
I say that all the time. I said, "No, you need." Well, the thing is, like, she took student loans. Like, I wasn't the one that told her to take student loans, so she did. So until the student loans are paid for, she's got to keep going to work, So she's I'll work forever. But
it is funny though. I have started seeing like, these Instagram posts about these women being like, who are these feminists that were fighting against like wanting
staying at home?
Yeah, staying at home
and baking cookies.
And don't get me wrong, staying at home is a tough job. Like my sister did it for a little bit.
No, it's not.
Hey man, especially if you're at home, like, and you don't have daycare and you got crazy kids, dude, it's tough.
So
It's tough.
one of the funny things is like my wife figured out like one of my like triggers for like getting aroused is like being domesticated, right? So she'll play into that a little bit. I'm like, stop, you're ruining it for me. She's like, women shouldn't have rights. I was like, whoa, 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 stop that, stop. It's
Oh god.
she's like, I want you to take care of everything. I don't need to think about finances. I'm like, babe, my inner Al Bundy is coming out right now,
Yeah.
man.
It's like, honey, can I get a raise in the allowance? You're like, oh my god, I'll see you in the bedroom in 5 minutes. No, I'm just kidding. Magic.
Yeah.
Oh man, that's fucking hysterical.
Once you get married, I feel like my wife is my best friend when it comes to like certain things. Like now we just kind of bond over things. And it's funny, like I could just be my true self around her. And she's weird as hell and I'm weird as hell. So it works out well. You know. Who here is married to someone and y'all are just like completely normal, like you're on like TV show, like, hi honey, how are you, let's go to lunch, let's do dinner, like, or do you guys just like randomly slap each other in the butt, like like my wife will be walking by, it's like smack.
That's me. That's how I am in a relationship.
Sorry.
Yeah. Yeah, I don't understand. I've seen some people like, I don't know, I'm a sarcastic asshole, so like I just can't imagine sitting at dinner with my significant other who I like have as like my one true love / like every relationship I've always just been like that sarcastic asshole. So like love or hate my humor, right?
Look at what Zoe wrote. I tickle my wife. Ran out of stuff to talk about. Look, Chris is like married 15 years ago, ran out of stuff to talk about. I don't know.
You guys are out of control.
This has been going on for an hour and a half.
But yes, it's been interesting. I'm curious. So I will probably poke you about selling a portion of. I'll probably just look at whatever I have in terms of negative on VG, keep that, and then just whatever. Sorry. Keep what's positive on VG because I have a lot of it. I'm not up as much as our public portfolio, but I'm up like 60%. Actually, I might be close to 65. I don't know. I got to double check. But I'm kind of below what I went a little harder in the IPO than we did in a public portfolio. So, but yeah, I might sell whatever that position is and move that over to next because that's the thing. I'm thinking in 10 years time, where I see VG and where I see next decade. And VG, I would say, is a little bit less risky just overall. And I could see buybacks. I can envision a lot of that. Yeah. The thing that I see with next decade is there could be potential dilution, but I just don't see a lot of it, right? A lot of that financing is secured by the SPA deals. So I don't know. I also would want to see when they plan on sanctioning some of these projects because like Venture Global, I'm not concerned about them going into debt right now to be able, because they have producing assets are going to generate 6 to 7 billion in EBITDA and will continue to grow that going into 2026, 2027. Same thing with next decade. If they start sanctioning projects in say 2029, 2030, I'm not going to be upset because by that point they're going to have trains 1 through 3 producing a decent amount of income and trains 4 and 5 on the way, if not already delivered. And so if they're sanctioning things by then, it's going to be like what Venture Global is right now. So anyway, it kind of makes you think a little bit. We're not too far away.
Here's the thing. According to their projections, they're going to do about $1 billion in distributable cash flow, right? So I'm thinking that's probably like 2030, right? Construction timeline. So that's 5 years from now. So if you're thinking about $1 billion in distributable cash flow, and right now the market cap is $2 billion, that's 50% of the market cap coming back to you as an investor in cash flow, right? So if anything, they'll probably end up following the same funding mechanism as they do with as Cheniere, where 50% will go to debt. I'm not sure, do they have any debt right now? Because I wouldn't think that they have a lot of debt, because they're basically sold off the portions of the what are they called? Of the
I still think
projects
that they do.
built.
I think that it just doesn't start until the facility starts.
Yeah, so I have to check that out. So a portion of their cash flow will go to debt, but then the others portion, about 25% will go towards share buybacks, another 25 towards dividends. So if you're thinking about, so Chris, did you mention a supply glut? Yeah, that's a risk. That's a risk that we have to contend with. You know, right now, when you try to project out deals in 2030, that's why it's really important to get the 20-year SPA deal signed. Because even if there is a supply glut in 5 years, it doesn't matter, because you have a pay or take contract, right? So that's the way to kind of think about it. So wait, was it Chris Patel? Interesting to see that in 2025, some men have 16th century ideas about women. Please tell us more about your bigoted ideas. It's just a joke, buddy. Relax. Don't be, it's not so serious. Yeah. People can joke, man. It's not a big deal.
We can joke in 2025?
I hope so.
Is that why?
Otherwise, what's the point? Otherwise, what's the point?
Might be why I voted for Donnie. But anyway, so
I just want to clarify. I respect my wife having to go to a job that she's miserable at, because that is what equality looks like.
That's equality.
I respect her ability to go there and have to deal with people and deal with the stresses of life. Because you know what? Equality. Listen, if it were up to me, she'd get 2 jobs. That's how equal I want things to be, you know? And if she makes less money than me, I think she needs to work harder to get to my level. That's equality, right? Because that's what you guys want, right? Isn't that what that guy wants?
That's what I want.
Wants women to work harder?
I want a sugar mama.
Just to be equal? 100% women, bro, they should be working hard. You know, let's go. Work 2 jobs. Shoot, I'm holding you back. Babe, let's eat some of that equality cuisine. Let's get you a part-time job. Someone on YouTube said that I'm holding you back. My wife's like, she's a sugar daddy. This is the funny thing how is it bigoted to say, I don't think women should work hard? And it's like, interesting. You know, I don't want my significant other working really hard. You know, is that a bigoted thing to say?
I think the same. You know, I personally, you know, not to say that I look down upon anybody that has 2 incomes, right? I do really well. I've been able to put myself in a place where I feel like, unless this person has extreme spending habits, like beat. No, I'm just kidding. Unless this person has extreme spending habits that I'm not aware of, I mean, I feel like I can handle a lot at what somebody throws at me in terms of that. And so
I was going to tell my wife to, you know, she could quit her job, but you know what? I don't want to be a bigot. So I'm just going to tell her, sorry, babe.
Hey man,
you got to go to work. Otherwise I'm a bigot. I'm a bigot. Because I don't want my wife to work so hard. Yeah.
But no, sorry. I mean, I don't look down upon anybody that has 2 incomes or families that have 2 incomes. Some people like that. I would love, I personally wasn't, my mom worked, you know, when I was growing up. She did evening shifts as a nighttime nurse supervisor, and then became a director of nursing. And I learned a lot about my work ethic from her. Learned a lot about life and business from my dad as well, and my grandfather and a lot of folks. But to me, you know, my grandmother was a homemaker, and that was a tough job. 6 kids, you know, all different walks of life from 18 to like 4, you know. My dad was 18, and I think the youngest was like 4 or 5 years old. So, you know, 14 years worth of spanning in kids, all, you know, walks of life in one single house. So anyway, I don't think it's an easy job, but I do think it's a worthwhile job. And I do notice an opportunity where I also don't think that I would love to be wealthy enough where my kids don't need to get an engineering degree. Or
that they can have an art history. They can have an art history degree.
I would love that, right? And if you know, and the thing, I hope I'm well off enough, and if I get to the point where I have children, or my nieces or nephews, where I could just coach one of them to make sure. And I told my sisters, you know, an unfortunate passing of my death, because right now I don't have any kids, it would go to my sisters. I was like, manage the money this way, right? Invest it in these things. Only take the dividends. Never spend the principal. Of course, it's their money at that point. They can do whatever they want with it. But hopefully they would recognize, like, Matt was a smart dude. He was able to accumulate a decent amount of money. They don't know how much money I have, but they'll be surprised, I'm sure. And hopefully they'll be like, oh, shit. Yeah, we should probably listen to whatever the fuck Matt was doing, because, you know, he knows what he's doing.
It's my mom, when I was 14, 15, like, she used to have this boss who was just like drive her crazy. And I remember she used to come home and she would cry. And I think the happiest thing was my mom when my dad said, look, you don't have to do this anymore. Like, we'll figure out the economics of the whole thing. Just you don't have to work and deal with this BS. And my mom stayed at home. And let me tell you, those were probably some of the best days. Like, I woke up in the morning, I got to see my mom. She used to make, breakfast and stuff. I'd go to school, and then when I come home, my mom was there, and it was, it felt good to like have someone and have dinner with my mom, where before she would come home and she'd be like, stressed out. And so I think to some degree, my mom not having to work actually saved like her like mental sanity. One of my friends, dude, this is so weird, but one of my friends, he used to live in the same building as me. One day, she used to work at the post office. And one day, like me and him just came home. Bro, his mom had just shaved off all her hair. And it was like, she went like cuckoo. For some reason, I don't know. I have no idea what happened, but we just saw her and she just had her head shaved, completely bald. And she just started acting weird and all this other shit. And I felt bad for my my friend. I think his mom eventually got somewhat normal, but man, when that happened, I was like, what the hell just happened? Because she looked like she was completely normal right before then. So I don't know.
Man, the world will make you go nuts.
I think that's the first sign when women go insane. They start shaving off body, like hair. Like when I see like hair come off, or they cut it really, really short, I just like, there's something going on here. That's like a trigger, right?
So if a girl,
yeah. If you ever see like that show that song with Katy Perry, like she like cuts off all her hair and joins the Marine Corps, like because her boyfriend broke up with her. It's like, bro, what the hell,
Yeah. Or they dye their hair red. That's generally
that's another thing, when they start dyeing their hair. That's like trigger, right?
Yeah. So I don't know.
This show is better than Kimmel.
Appreciate that.
Sounds like a psychotic breakdown, bro. I know post office. That's where they come that term going postal. It's because the post office drives you crazy. I don't know how it drives you crazy, but every time after a breakup, I get a haircut. Damn, that just confirms it. There you go.
Heard her first. Bangs are a red flag. Are we about to become Myron and Fresh and Fit? Is that what this is? We're gonna become the talk show hosts.
No. We're definitely not Fresh or Fit, bro. Neither one.
I'm neither. They would make fun of me because I'm fucking out of shape. So
Dirty and Out of Shape, is that the new podcast we're gonna call it?
Dirty and Out of Shape. I like that. Yeah, exactly.
All right, I think that's it. I'm getting calls. Like, I get to work, even though my shift doesn't start till 12. I got 11 minutes, but I'm already getting calls. So I know tonight's not gonna be a good night.
What happens when you're a high flyer and you know what you're doing?
Yeah.
You guys rock, man. I appreciate you all. It's been a great, fun ride. Market's doing well, man. I think there's going to be something going on, whether it's oil prices spike up, whether it's something with this Iran thing that hopefully doesn't happen, but something's going to happen, and I'm sure in 2 months we'll be surprised. But for now, we'll see.
Yo, Thanos gang is in the lead right now, but ODB is coming back.
ODB's coming back. I love that.
ODB is coming back. If you don't know who ODB is, look it up. It's old dirty bastard. All right.
Cool. You guys rock. Talk to you later.
Bye.
Greed is good.
The stock is going to go up, down, sideways, or in fucking circles. It's all a fugazi.
Sell it all.
Greed is good.
Huge upside potential, upwards of $60,000.